Hi, hello friends. Welcome everyone to the annual performance review of Stratazon, the Amazon of trading strategies. This is Ashok Devanampriya and Pradeep Nazre hosting this annual review today. So friends, who are we? This is for those of you who don't know about us. We are quant strategy developers for Indian and global markets based out of Bangalore, with a cumulative 30 years of experience, 30 plus years of experience in the financial market. That's combined put together of all the core leadership team, and 50 plus years of cumulative experience in the field of technology, software development, artificial intelligence and machine learning space. We are finally a passionate group of 40 people with diversified experience in multiple industry verticals. We have one passion. We want to become the strategy lending factory for the Indian and global investors. So this is our leadership team. I drive the vision and mission of Stratazon. We have my colleague Pradeep on the call, who is also the co-founder and the chief strategy officer for the organization. We have Mohan Raj, who is the CTO of the Algo division. We have Arun Iyer, who is the CTO of platforms, and we have Bhaskar, who is the uh, head of sales and marketing. He drives the complete Algo division sales as vice president of sales and marketing. So friends, our vision was very simple. We want to grow our fund 100x in 25 years. Looks like a mammoth target, but when we drill it down into multiple bits and pieces, it doesn't look that impossible. For that, we have to build 100% automated algo strategies for the clients. We have to roughly achieve about 26% CAGR year on year. That will help our clients to go to 100x in 20 years, which is pre-tax, and post-tax maybe in 25 to 27 years, the customers will be able to achieve 100x. Now, how to approach the problem and achieve this 26% CAGR, which is the crux of the whole mission? Friends, our current ticket size is around 1 crore. Anybody who is holding mutual fund of 1 crore or equity of 1 crore, they can join us on board. What we do is we divide the fund into two parts. One is 80% fund, one is 20% fund. The 80% fund will continue to stay in mutual funds, while the 20% will be in the demat account as cash. And that particular 20% fund we further divide into equity quants and commodity quants, where equity quants can work from the morning 9:15 to evening 3:30, and commodity quants can work from evening 3:45 to 10 p.m. at night. So the expected typical return from equity quants is about 12 to 24% per annum. Commodity is around 12% per annum. Cumulative maybe 24 to 36%. Most of the mutual funds generally outperform the broader index because we pick some of the balanced funds and we expect them to grow at around 12%. Having said that, the expected overall return would be 36 to 48%, excluding Stratazon fees. If you ask me, how did we deliver this year? In fact, in case of equity quants, we roughly delivered about 31.5%. Okay, and the commodity quants is an idea where the concept is still evolving. We are aspiring to bring this idea live maybe in the next 6 months, and we delivered roughly about 31.5% last year, even without commodity quants, while the equity markets delivered 1.5%. So the best part of our story is, with just 20% cash, we were able to deliver 31.5% because of pledging the mutual fund. Not only that, the algos are matured enough, sustainable, manageable, reliable, and risk-free model. We'll talk about it in the subsequent session. So overall, net to net, about 33% returns was generated in the last financial year for our clients who were with us from April till March 2023. All right, this is in a nutshell. So all I am saying is next year, even if I deliver the same return that I have done in equity quants, definitely these kind of numbers we can again achieve. So how did we perform last year? All right, the performance of Stratazon last year was around 31.5%, and Indian market was more or less flat. It hardly delivered 1.5% on the broader markets. Depending upon the kind of mutual funds and equity clients are holding, the returns can vary anywhere from 0 to 10%, maximum being 10% if they are lucky to hold an uptrending stock. So the alpha for the strategy for the year was about 30%. Okay, so ideally post fees the algorithms delivered about 20% to the customers, whereas the equity component or the mutual fund component delivered only 1.56%. Remember, 80% of the client fund always stays in equity funds, and only 20% of clients funds will stay in the demat in the form of cash. So this 20% generated 20% return, whereas the remaining 80% hardly generated 1.5% return. That is why the most of the client accounts fell short of the 26% number that we were talking. However, combined together, it delivered about 21.5% post all fees and expenses. This is a typical performance of Stratazon over the last 12 months, and we are very glad to say that Stratazon never lost money in any quarter. Of course, there are 3 months where we lost some money. However, quarter on quarter, Stratazon was very consistent in terms of generating profits. It was never in any underwater equity quarter on quarter.